long term for a particular goal, and then after explaining them about the equities and how much return that equity can provide with other, maybe we can say, disadvantages like higher risk, okay, and kind of things. So that will be your last assignment, this, and after that you will have one role play kind of thing, and that you need to record as a video, and that has to be uploaded.
Okay.
Okay,
Okay, ma'am.
that will be your last assignment for SAPM.
मिस
हाँ बोलो.
मिस का ये कंपनी एनालिसिस में हमको बैलेंस शीट भी अटैच करना पड़ेगा कि मतलब डायरेक्टली कैलकुलेशन हम वो करेंगे और कंक्लूड कर देंगे.
You can, if you are like going for your Word document, then you can copy paste the link from where that balance sheet is available. So
ओके.
entire balance sheet is not required. Like anybody whosoever is reading your document can go for that link, can select that link, click on that link, and go to the balance sheet. Okay,
ओके
so
ओके मिस.
link, you can provide link from where you collected the information, and which balance sheet, like of which website and which balance sheet you have analyzed, so that numbers could be matched.
ओके मिस.
Okay. 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 So, this slides and this chapter, and particularly your book, covers all these ratios. Now, there can be, two to three formulas given for each and every ratio. It might happen, but you need to stick to only one ratio. Don't get confused, because in previous slide as well we looked at ROE and one or two more ratios, and those ratios were explained in two three different ways, or two three different formulas. But yes, you can pick any book, maybe SAPM, this one, or Amrish Gupta, any book for accounting ratios, and stick to one particular formula and try to analyze figures from that formula. Okay, so that's why I'm not going much in detail, because you have learned entire subject, financial accounting, and to explain all the ratios and interpretation and analysis in one or two lectures, it's not possible. It is something like entire subject. So whenever you are doing your assignment and you may not understand the analysis part of any ratio, you can ask me over WhatsApp or whatever way you want to. Okay, so right now we are not going much in detail. Try to do it yourself. If couldn't, then you can ask your doubts. Okay, so one ratio we discussed is return on equity. This slide shows past 3 years data, and that to analyzed information. Okay, you can take past 3 years or past 5 years, so that again you people can decide, because right now you are not actually going to invest in those companies whichever you have selected. You just want to have experience of how you can analyze and how you can reach to particular conclusion that this industry and this companies could be targeted for investment, right? So you can take 3 years, or you may take last 5 years data as well. Then two more ratios: book value per share and earning per share, and you can see the formula. Okay, and this could be compared, and based on this you again you can take decision. Okay, so book value per share you can find out by this formula: paid up equity capital plus reserves and surplus divided by number of equity shares. Okay, then equity per share formula is equity earnings divided by number of equity shares. Okay, so this represents your book value, historical value, and this represent your ongoing value. It can be said like that. Okay, so these ratios are also important. Then dividend payout ratio and dividend per share. Okay, again formula is given. Okay, based on this particular ratio, you can find out that like how much portion of the earnings are being retained and how much portion it is being paid out. And depending on that, if no dividend is being paid in particular period or year, you can again search for the opportunities or maybe growth projects or some projects kind of thing where your earnings are going to be deployed. Okay, so all these ratios will give you certain hint, and based on that you can find out next level information. Okay, and based on that you can decide. Growth performance, to measure the historical growth, the compound annual growth rate, that is CAGR, in variables like sales, net profit, then EPS, dividend per share, is calculated. So all these 3 to 4 terms you can use to find out how much company is growing. Okay, to get a handle over the kind of growth that can be maintained, the sustainable growth rate is calculated. Okay, so what is formula of CAGR? How you can find out CAGR? So this formula is given. Three things are given: CAGR of sales, then earning per share, and dividend per share. Annual growth rate of sales, annual growth rate of EPS, and annual growth rate of dividend per share is being calculated in this particular slide. Uh, as absolute figures, these figures may not have of any use, but what we are going to do, we are going to calculate it for 2 to 3 companies, and depending on its market capitalization, depending on the size of the business, and balancing all these figures, or making it comparable based on the size of the business, you can compare those companies, and you can compare these ratios for those 2 to 3 companies. So whenever you are going to compare these figures for 2 to 3 companies, it will be meaningful. Okay, so, and yes, year on year. So two kind of relative analysis you can do. The same ratio for 2 to 3 companies, if you calculate, make it comparable, and then by comparing these figures you can take any kind of decision. Another thing is collect last 5 years data for same company or same firm, and do trend analysis kind of thing, and based on that you decide that which years were of higher growth and which years there you cannot see desirable growth or something, and what were the reasons, and what could be the outlook for future. Okay, and what could be the reasons for growth in future as well. Okay, so this two kind of relative analysis if you do, then and then only these figures will have some meaning. Otherwise, as absolute figures, like in this particular slide, only one figure for 1 year for one company is been calculated. So if it is not been compared with anything else, it won't have any use. Okay, so this is like during 5 years how much company is growing, that calculation is given. So 2002 is being compared with 2007. So if you take 2002 as base year, how much percentage growth had been there till 2007. So this represent 5 years growth rate, you can say that. Okay, or you can compare year on year as well. Okay, not for all 5 years, but you can compare it year on year as well. Okay, then this is EPS 2002, EPS of 2002, EPS of 2007 raised to 1 by 5 minus 1 will give you growth rate of EPS for 5 years starting from 2002 till 2007. Same way dividend per share. Okay, so this ratios also you can calculate, and you can analyze the growth rate, and even you can compare more than two companies. Sustainable growth rate is defined as it is equal to retention ratio into return on equity based on the average retention ratio and the average return on equity of the 3 years period. So this is like averaging. You can do averaging of 3 years or 5 years. The sustainable growth rate of this is the example which is not covered in this slide. You can see it in book. So I'll upload that case study, okay, on your WhatsApp group. For that you can analyze. Okay, so sustainable growth rate, this is your retention ratio, average retention ratio, and this is your return on equity, average return on equity for 3 years. And this is your sustainable growth rate. So what this term means, sustainable, that in future you can expect. It is just prediction. It may not be in actual terms, but it is just the prediction that during next few years or in future you can see this percentage of growth rate, that is sustainable growth rate. Particular business could sustain this much growth rate. Okay, so this could be analyzed as prediction. Next term is risk exposure, beta. Hello.
मैम एक बार ना वो बुक वैल्यू पर शेयर का फॉर्मूला बताइए ना। ऊपर ही था, थर्ड फोर्थ स्लाइड के ऊपर।
ये हाँ,
और हाँ, बस 1 मिनट मैम।
Paid up capital plus reserves and surplus divided by number of equity share.
यस मैम, हो गया।
हो गया।
हम्म,
ये पीपीटी मैंने क्लासरूम पे अपलोड की है, अदरवाइज आई विल प्रोवाइड यू दिस।
ओके मैम।
नहीं किया ना अभी तक शायद अपलोड।
नहीं किया मिस, मैं वही चेक कर रही
बाकी है मैम, ये
थी।
बाकी है।
मिस इंडस्ट्रियल इकोनॉमिक ही किया अभी, जब जो मैंने मांगा था। अभी कंपनी का भी जब करेंगे तो शेयर कर देना आप।
ठीक है, मैं कर दूंगी। Okay. So previous slide we're covering your ratios which are related with company, and you can do company analysis. This is related with market beta, and based on this measure, number of models which you are going to learn in subsequent modules like CAPM model, then arbitrage pricing model, asset pricing models, and 2 to 3 models you are going to learn, which is related with, or this term is related with those models, and this is the base of those models. So what is beta? It is the volatility relative to the market. Okay, now what this market term represents, can anybody explain what this market term represents?
शेयर मार्केट में।
Yes, share market. So till now we were discussing about ratios, then accounting information, then financial statements of particular company. Okay. Again, this beta measure is being calculated for a particular company, but this won't be based on the accounting information or financial statement analysis, but it depends on the variability of stock price relative to market or the indices. Okay, change in indices or volatility of particular index. So may it be Sensex or Nifty. So you can check particular company's volatility, price volatility against volatility of Sensex or volatility of Nifty. So the market term represent exactly right. It represents the stock market, and if you want to find out price movement of the market, you have to take any barometer. So that could be your Sensex, Nifty, then Bank Nifty or something like whatever. If you are analyzing stock or company from banking industry, so you can take that index as well to compare it with industry standard, that particularly this industry have this much level of volatility, and what volatility that particular bank has as compared with the standard. Okay, so for that you can take bank index as well. Okay, so what beta is? Beta represents volatility relative to the market. So through whatever I have explained, you must have understood how you can calculate it. Like, right, we calculated standard deviation. Same way, Excel sheet, in Excel sheet you can find formula of beta, and you can take historical data of particular company and historical data of Sensex or Nifty, and applying formula of beta on this two different columns, to this two different figures and data, you can find out beta in Excel sheet. Okay, तो ये कैलकुलेशन भी आप ट्राई कर सकते हो. ठीक है, so this is about beta, and that is the measure of volatility of companies prices against market. Then next is volatility of return on equity. So range of return on equity over n years. So you can take averaging of return on equity. Okay, then divided by average return on 1 minute. This is range. So range means starting end period minus starting period. So that range will get divided by average return on equity over n years. So say suppose you took sample of 5 years. Okay, so range of return you can find out through last year minus the first year. Okay, so that will give you range, and divided by 5 years average return on equity, so that will provide you volatility of return on equity.
मैम ये बीटा क्या है? वो सिंबल है ना बीटा?
बेटा एक कैलकुलेटेड
उस
फिगर है, एक
सिंबल है,
मेजर है.
हाँ।
हाँ,
हाँ
तो
मैम वही।
फॉर एन एग्जांपल, you calculated beta for a particular company, and it amounted to say suppose 1.1. So this number, what this number represents, that and you took Sensex as your benchmark, say suppose. So if there is 1% change in Sensex, there would be 1.1% change in your stock price. So beta can be evaluated like that. So it represents volatility against market, in the sense it will be calculated as a number, and standard will be kept as 1. Okay, so the 1 represents your market, that whenever 1% change is there in market, how much percentage change your company price would be there. Okay, so 1.1 represents that 1% change in Sensex would result into 1.1 percentage change in company prices. For an example, it is 0.85. So 1 percentage change in market will lead to only 0.85 percentage change in particular company's price. So this is the analysis. Okay, that you will learn again in third module. CAPM, the model is based on this beta measure only. आया समझ में?
यस मैम।
Okay. So which could be categorized as favorable and which could be categorized as unfavorable factors, this table provides you. Like, higher the ratio, will it be better, or lower the ratio, will it be better? So this analysis, this will be useful for your analysis. So whichever number you get as the answer of your ratio, and maybe beta ratio, anything, you can take hint, like whether it is high, whether it is low, and if it is high, is it better? Okay, so this is the table. I don't think we are required to go much in detail, because it is self explanatory, है ना? ग्रोथ लेवल है तो हायर होना बेटर है, रिस्क एक्सपोजर है तो लोअर इज बेटर. So you can go through, but for each and every parameter, with each and every ratio, each and every parameter, you must know that higher the better or lower the better. Okay, तो वो आपको पता होना चाहिए, then and then only you will be able to analyze. For a range of period or for number of companies, comparing number of companies. These are valuation multiples. uh, as laymen, lot many investors look at PE ratio, then they compare with industry standard or PE ratio of other companies with the same market capitalization base, and also these two ratios, and especially PE ratio is very much important. If you are not the expert of the field, based on these figures even you can have hint, and like which stock is you know for which stock you can expect good return in future. So it depends on price earning ratio. Okay. And this is also used for identifying whether particular stock is undervalued or overvalued. So if it is undervalued in future, there are chances that the price will be high, and if it is overvalued, then there are chances that prices would be low in future. Okay. So for that reason, for that kind of analysis, even PE ratio is used. Formula, I think you all know: price per share at the beginning of period divided by EPS. Okay. And price to book value. So this is something like historical, and this is ongoing for each and every year. For current period you can find out, that is PE ratio. PBV ratio is price per share at the end of particular year divided by book value per share. Okay, so that will give you PBV ratio. Even this two can be compared over a period of time, like when it got listed or when it started. Okay, maybe like it issued equity at that time, what was the ratio, and now in current period what is the ratio and what is the difference. Okay, based on that even you can decide. Now next is going beyond the numbers, like for company analysis, is it like that only ratios, numbers, parameters, measures you are going to calculate, and based on that only you are going to take decision? Is it like that?
No, ma'am.
Okay. So what?
No, ma'am.
Yes. So what we discussed about the quantitative analysis, but we know that for each and every kind of analysis there are two different, two extremes. You can say that one at one extreme you are going to do quantitative analysis, and at other extreme you have to go for qualitative analysis as well. Okay. So you can look for this parameters as well. Okay. So, for analyzing present situation and prospects in qualitative terms, you need to check all this, and it is not limited to only this bullet points. Yes, for qualitative analysis, you can go through, recent news is about the company and how its management is performing, or which kind of decisions they are taking, which kind of decisions top management is taking, and lot many things, lot many issues you can analyze, and you can go through recent, whichever recent information is available, right? So you can go for analyzing availability and cost of inputs, raw materials. Yes, exactly, that is very important. Then order position means sales or customers, marketing point of view, that also you can analyze. Regulatory framework. Yes, exactly, you need to check, like what exactly the regulatory framework is, how much strict it is, and uh, uh, you know can it be the hindering aspect, or can it be the facilitating aspect? Likewise you are required to analyze. So depending on that even you can decide. Then technological and production capabilities. Yes. The marketing and distribution, finance and accounting, every aspect you need to check, you need to analyze. Okay. Evaluation strategy, again this we have already discussed. Okay. Strategy, like initial slides we talked about cost, leadership, and differentiation and kind of strategy. So which strategy the company is following, and can it be can yes do it was that company successful in having competitive advantage through that strategy or not. So that also you are required to analyze. Okay, caliber, integrity, dynamism, all this kind of soft aspects also you can analyze. Then organizational structure, then execution capability, investor friendliness, all these parameters also you can evaluate. Now next is intrinsic value. Yes, we already talked about that through PE ratio, and comparing PE ratio with the market price, you can find out undervaluation or overvaluation. Okay, so you can estimate the expected EPS. Okay, PE ratio, then develop a value anchor and value range. You can develop standard or a particular range in which you can maybe like this is the prediction, so in that particular range it may fall in future. So this is about your EPS forecast. It is something like based on present information or past few years information, you can project each and everything, like what could be the sales for next year, what could be the cost of goods sold, what could be the GP. Okay, and based on that you can forecast EPS for next period. And these are the like one could be pessimistic kind of figure, one could be optimistic, like if market is market is going to grow, then what percentage you can expect. So these are three different assumptions, three different probabilities. It may increase by 10 percentage, it may increase by 11 percentage, or it may increase by 9.5 percentage. Okay, so likewise assumptions are there and projections is being made, so you can project and you can find out earning per share, projected earning per share. ओके, ये जब आप कैलकुलेट करोगे ना तब आपको डाउट्स आएंगे, अभी तो मतलब लुकिंग एट द फिगर्स आई थिंक इट वोंट बी डिफिकल्ट टू अंडरस्टैंड. Next is constant growth dividend model. So you can constant growth in the sense you can assume one percentage, and you can assume that year on year that much percentage of growth you can have. Okay, so for PE prediction you can take like this is I think regression model. So based on certain years price earning ratios, you can regress it again this expected figures and find out particular regression model, like you have learned the alpha plus beta into certain variable. So PE, price earning ratio, can be determined through these 3 4 variables, and once you have predicted these 3 4 variables, you can based on regression analysis you can predict this particular ratio as well. Okay, this is another formula for PE ratio, dividend payout ratio divided by required return on equity minus expected growth rate in dividends. Okay, so these three parameters are going to decide PE ratio, and that's why first you need to predict this 2 3 variables, and based on that you can predict next. Okay. दो अलग फॉर्मूला अप्लाई किए हैं. फर्स्ट इज फॉर कांस्टेंट ग्रोथ डिविडेंड डिस्काउंट मॉडल. Okay. I think going much in complication, like much in detail or complicate it, rather than that, you can go for that Amrish Gupta accountancy book or something like that. Okay, because PE ratio, finding PE ratio to through two three different formulas, you will get confused, like which you should consider or which you should take into account. Like this is regarding historical analysis, this is regarding weighted PE ratio, so you will get confused like which particular measure you should apply. Okay, so better you stick to only one formula, apply that formula only, and depending on that, even you want to predict something like price earning ratio, so earnings has to be predicted, and price you will have information from market. Okay, so dividing market price by your earnings prediction will be enough to find out futuristic PE ratio or predicting PE ratio. Okay, so yes, whichever formula you want to take, you can. But again, the all this formula are going to give you prediction, some prediction of P ratio, and depending on that, you are going to decide. And this is value anchor. Okay, anchor meaning thereby standard. So this is projected EPS and appropriate PE ratio means. Again, this is based on projection, but when we talk about anchor, you can find out standard of industry or standard of some relevant company, like two competitors. So if you know about one competitors, like that competitors PE ratio or uh, some other ratio or some other parameter, you can take it as standard. So that also you can use as value anchor, not only through this formula, but finding industries standard for that particular you know industry or companies. For company as well, you can find out value anchor. Okay, and this is the value range. So once you have predicted it, you can find out a range. Like if you have predicted 34.35, this again depends on the investor himself. Like there is no standard formula to find out this particular range. But once you have found out this figure, you can find out this range. So if market price is falling below the lower limit, then you are going to buy. If it is within the range, then you will be holding that, and if it is more than the above figure, like higher figure, then you are going to sell it. Okay, so depending on that, you are required to find out value range, and you can take decision whether to buy, hold, or sell. Return on equity versus price book value ratio. Okay, so first you need to find out these two ratios, and depending on the answers which you are getting, you can find out whether it is overvalued or undervalued. Okay, so if ROE is low and your price to book value is high, it is regarded as overvalued. Can anybody explain why it could be categorized as overvalued? Yes. Hello.
Ma'am, because book value price is high and on that equity we are getting very low return, so it is considered to be overvalued and vice versa.
Yes. Overpriced. Hello.
Yes, ma'am.
So it may be overpriced, and in future the actual prices may go down. Okay. And inversely, if your return on equity is high but your price to book value, that ratio is low. Okay. So
मतलब
on.
मीन्स
Hmm,
मतलब मीन्स जो इन्वेस्ट करे वो ज्यादा पर रिटर्न जो है वो कम है, इसके लिए वो ओवर वैल्यूड है ऐसा।
क्या बोल रहे हो?
मतलब में जो हम इन्वेस्टमेंट कर रहे हैं वो ज्यादा करे पर जो रिटर्न है उसके सामने हमें कम मिल रहा है, इसलिए वो
हाँ,
ओवर
that's
वैल्यूड है।
why overvalued. Yes.
सेम इसमें अंडर वैल्यू में।
Hmm. But what's the hint? If you are getting any stock to be undervalued, meaning thereby in future there are chances that prices will be high and market correction will be there. In case of overvaluation, there is expectation that in future prices are going to be low. Again, the same thing, correction would happen and prices may go down, and accordingly you can take the decision. In case of overvaluation, you can short sell. In case of undervaluation, you can buy at that particular time. Okay.
यस मिस।
On this basis, even you can decide.
मैम हम
हाँ,
वैसे डिसीजन ले सकते हैं जैसे एसेट की बुक वैल्यू ओवर वैल्यूड हो जाती थी और अंडर वैल्यूड हो जाती थी,
asset की
वैसे ही
वजह से.
इक्विटी है यहाँ पे एसेट की।
Yes, because like for which decision we are doing this analysis, like to invest in that particular stock or not. So return on equity, then price earning ratio, then dividend payout, all these things would matter much than anything else, right? So assets overvaluation, undervaluation may not have that direct impact on your equity pricing or stock pricing than this return on equity or price earning ratio or PBV ratio and all those things. But yes, it has indirect impact. So you are talking about assets overvaluation or undervaluation.
या मैम।
Okay. It will have indirect impact, not the direct one. So in which sense asset may be overvalued or undervalued? मतलब वो नहीं समझ में आया. What you want to ask?
मैम मैं ये कह रही थी जैसे एसेट जब हम अकाउंट्स करते थे तो एसेट की बुक वैल्यू अगर कम होती थी पर उसकी वैल्यूएशन हाई होती थी तो उसे हम अंडर वैल्यूड करते थे और फिर उसे रेक्टिफाई करते थे, तो उसके लिए रेक्टिफिकेशन अकाउंट बनाते थे। मैं मतलब थोड़ा अकाउंटिंग सेंस में बोल रही हूँ, पर यहाँ पे वैसा कुछ नहीं होगा, वैसे ही हम उसको इससे रिलेट करके समझ सकते हैं ऐसा। सिमिलरली अगर
अच्छा,
एसेट की
overvaluation and undervaluation and what kind of impact it has on future. ऐसे बोल रहे हो आप?
यस मैम।
ओके. हाँ, उस वे में भी एनालाइज कर सकते हो. But talking about impact on stock prices or impact on companies price, stock price, then this asset valuation will have indirect impact, and this all ratios will have some direct impact, and that's why we are much interested in calculating all these ratios. Okay.
ओके मैम।
This is growth duration matrix. Okay. ड्यूरेशन आई थिंक ये डायरेक्टली समझ में नहीं आएगा. देयर इज कैलकुलेशन ऑफ ड्यूरेशन एज वेल, तो मुझे वो सम पहले आपको एक्सप्लेन करना पड़ेगा, फिर ये समझ में आएगा. सो वो वी शुड स्किप दिस स्लाइड right now. जैसे ड्यूरेशन, यानी अगर आप इन्वेस्ट करते हो डिविडेंड, इट इज 1 डिवाइडेड बाय डिविडेंड यील्ड, यानी आपका कितने ड्यूरेशन में मनी विल बी, you can have that money back or something. तो इसका पूरा सम आता है, कैलकुलेशन आता है, that I am required to explain you first. Okay, I think this slides we can take in next class, नहीं तो ये information overload हो जाएगा. So any doubt till this PPT, this slide?
मैम आप आज ही सेंड कर देना, क्योंकि मतलब आगे का थोड़ा मेरा समझ में नहीं आया तो मैं रिफर कर लूंगी.
ठीक है, आज ही अभी अपलोड कर देती हूँ मैं.
ओके मैम.
Actually ये थोड़ा it is something like formulas and calculation, related with calculations and formulas. So directly explaining formulas without any number or without any calculation, it is difficult for you people to understand. But why I am not going for those calculations and all, because you like, as far as your syllabus in exam is concerned, you need to understand the analysis part and what those numbers represent and how you can analyze and take decisions. So that is much important than the calculations and all those things. So that's why I'm not going much in detail. But yes, let's see. Once you go through all the slides, if you think that any particular formula you cannot understand, or we should take one example, one illustration to understand that particular formula, next class I'll give you illustration as well in Excel sheet or something. Okay,
ओके मैम.
ठीक है. तो आप देख लो टिल 23rd स्लाइड, आप वापस एक बार रिवाइज कर लो. कोई बुक साथ में लेके बैठो. जैसे इफ यू वांट डिटेल ऑफ दिस चैप्टर, आई कैन प्रोवाइड यू. ये चैप्टर मैंने अपलोड किया है, चैप्टर 16 आई थिंक ये प्रोवाइड किया है मैंने, कंपनी एनालिसिस फ्रॉम योर SAPM बुक.
यस मैम. हाँ हाँ मैंने देखा था.
So you can compare the slides with the content of that particular chapter, and then if you don't understand any formula, or if you find something difficult, then we can go through it once again and I can explain you through illustration, है ना. एक छोटा सा सम लेके मैं explain कर सकती हूँ आपको. ठीक है.
ओके मैम.
Any doubt?
नो मिस.
ठीक है, आप देख लो, फिर कल की क्लास में जो भी डाउट्स हो वो भी बताना मुझे, तो आई विल ट्राई टू सॉल्व दोस डाउट्स.
जैसे कंपनी एनालिसिस कब तक मतलब दे रहा है असाइनमेंट?
कल ये इकोनॉमिक एंड
इंडस्ट्रियल
इंडस्ट्री
इकोनॉमिक.
एनालिसिस कल आप सबमिट करोगे ना, तो आप देख लो.
हाँ.
एक वीक तो मिनिमम मैं दूंगी आपको, अगर उससे ज्यादा टाइम चाहिए तो आप देख लो,
मेरे
अदरवाइज.
17 को टेस्ट भी है ना, तो मुझे उसका भी पढ़ना है.
ठीक है, तो नेक्स्ट टू नेक्स्ट फ्राइडे या सैटरडे सबमिशन रख लेंगे, ऐसे करेंगे.
ओके मिस.
ठीक है, आप लोग बता देना, उस हिसाब से मैं डेडलाइन सेट करूंगी.
ओके मिस.
Anything else?
नो मैम. थैंक यू मैम.
Welcome. चलो,
नो मैम. थैंक यू मैम.
welcome.
थैंक यू मैम.
थैंक यू मैम.
Welcome. Bye. Have a nice day. Bye.
थैंक यू मैम.